morning. My name is Ed Drozda, the Small Business Doctor, and welcome to Business Share. Today it's my pleasure to join John Dustin, the president of JED Insurance and Financial Service Agency Incorporated. They're an independent insurance and risk management firm providing services to businesses and individuals. John has a long list of credentials, which I find very impressive, and I'd like to start out here. John is a chartered property casualty underwriter, a chartered life underwriter, and a chartered financial consultant. John, good morning and welcome.
Greatly appreciate you having me on today, Ed.
It's a pleasure to have you. And John, I'm going to jump right in and say, what do these things mean to me? All these credentials. I'm fascinated by them. I envision a lot of education going into this. Tell me, what's this all about for me? What does it mean?
Well, as a consumer, Ed, I think it's important that you'll be able to gain resources from your trusted advisor and have a wealth of broad information to help you with your various needs, whether it be home, auto, business, whatever your need develops. It's important that somebody be able to at least direct you to the right place if they can't handle something.
Okay. And so becoming, for example, a chartered property casualty underwriter, what exactly is an underwriter? What is it that you do?
An underwriter, Ed, in a broad sense, is somebody that would accept, decline, and modify risk as it approaches them. The Chartered Property Casualty designation is through the Insurance Institute, and back when I passed the designation program, it was a series of 10 essay exams covering law, insurance law, accounting, property casualty, special risk.
Okay, fantastic. Well, you know, it's been a lovely winter here in New England. Winter is over, although I'm waiting for that final snowstorm because I know they do happen in April. How did the industry survive?
So the industry had an unprecedented winter. Significant claims. The frequency of claims was out of control. Most of the carriers had to order in special catastrophe teams from out of state. They may not have been familiar with the construction costs around here, locations where they were showing up. But I would say all in all, the carriers that we represented did a phenomenal job of trying to keep everybody at bay. The restoration companies, the industrial hygienists, the roofers, everybody was straight out. But I think people banded together to do the best they could.
Okay, so for example, on a practical level, I had ice dams, and while I didn't have any water damage in my home, I know I had neighbors that did. What is the role of an agency such as yours in helping people like that restore their property to its prior to winter condition?
Every agency has a different approach to handling claims, and every consumer has to find the level of service that they expect, that they're comfortable with. From our perspective, we engaged all of the remediation restoration companies. We tried to help secure contractors. We tried to help prevent further damage by getting roofers out to make sure that there wasn't further ice dam backup. The agency also can assist somebody, and the popular question of the day is, if I put a claim in, what's going to happen to me next year? Is my premium going to increase? Am I going to get a non-renewal notice? Am I going to be put in a special, fair plan situation? So to answer that question, we oftentimes would call the carrier because there were actually designated days that were considered catastrophic days. So a catastrophic day is a day in which you file a claim because your claim occurred that day. They're actually not going to make a charge to you for that. It's almost like a forgiveness situation.
Can you elaborate on that a bit? I'm a little bit unclear. So
there were specific days that there were so many claims that the carriers designate these as catastrophic days. So Ed files a claim on that particular day. The claim is sort of waived. It's not charged against you. So you get made whole, but it doesn't affect your future policy or premium.
So, for example, on one of those days where we had close to 2.5, 3 feet of snow, would that be a catastrophic day, for example?
Depends on the frequency of claims that day, whether there was ice dam. It wasn't related to the volume of snow. It's related to the frequency of claims.
Of claims?
Yes.
Okay. So when you refer to the frequency of claims, are you referring to a particular insurance carrier or
No,
industry
no.
as a whole, or how does that?
Each carrier had their own catastrophic dates. I'm sure most of them were sort of the similar days.
Okay. So that determination is obviously made after the fact.
Yes. Yes.
In hindsight, we said, well, on April 5th, we had 2 million claims for weather-related incidents.
Yes.
Okay. And so
They
that
were
met our
determined.
threshold, therefore it's a catastrophic day, so all who filed that day, it sounds
Yeah.
like winning the lottery almost.
Except for the process and the cost and the time and the soft cost to get made whole is, you got to put your time in to meet people, and that is the challenge.
Right.
We took the approach, and this came up a lot, where people would say, I'm just going to wait till the spring. And I would say, listen, the catastrophe teams are in now. You have a duty to always protect your property from further damage, number one, first and foremost. So if it's occurring, you got to stop it.
Okay.
But secondly, let's get the adjuster in. And if later on you feel it's not going to be that much over your deductible, or you're going to repair it yourself, you always have the right to withdraw the claim. But my feeling is, why prejudice yourself against the company and wait till the spring when the adjusters were here to do the work when they were?
Okay. Now, I heard you say that with your agency, for example, that you actually orchestrate the teams that are able to repair, to renovate. Tell me more. My understanding was always that an insurance agency was engaged in the process of covering and paying, remunerating the individual if they had a loss. But you're talking about something beyond that. I don't think I'm familiar with that.
In this instance, we typically don't give out an 800 number, and this is where consumer choice comes in. So oftentimes people might look at a low-cost provider and it fits their needs, but if you have a loss and it's a difficult time, they may not have references or referrals. So when you're selecting somebody, we elected as an agency to provide a little more breadth of service during this process to get good results so that our clientele were better served. So there are instances where you could call someone and they'll say, well, deal direct with the company, it's 800, this and that. We tried to provide some value-added service during this time because it was an unprecedented winter. And people were getting almost scared that, they were going to lose their entire home or whatever.
Or that they're going to find someone who's not reputable in a time when people come out of the woodwork, who are, quote, able to repair your roof or remove that ice dam, but in fact they remove something far more than that. So what you're offering is a value add, providing trusted advisors to your clients. Is that correct?
Yes, that's correct. And it's funny you mentioned reputation, so let's take it a step further with the carriers, Ed.
Okay.
When people select an insurance company, whether they go through a direct broker or an independent agency, you want to make sure they're a solvent company. Most of the companies from state to state have fair claim practice reporting standards that particular state monitors. So they always say, well, the adjuster tried to do this to me or that to me. Typically, the adjusters have to be treating people fairly because their activities are monitored at the state level.
Okay. So, on balance, if I might take us back again, because the snow. Personally, I like the snow, by the way, but that's another story. Did you find that your clients this year are generally satisfied? Is there expediency? I realize that's not an agency's responsibility, but is there expediency despite the fact of the number of claims? Are people generally, in your experience, satisfied with the outcomes?
I think most of the majority of the people that we serviced were very happy with the outcomes. There was some early on concern about, you get a check for $5,000. I thought it was going to be $8,500. Well, the reason is they apply your deductible, and then you're also not made whole until the work is completed. There's a physical holdback. So once we got through the process, and we really tried to sort of set the expectation of what was to occur. Mm-hmm. The adjuster may have difficulty getting out there. We had 40 claims today. This carrier had 1,500. So it's all about expectation.
Right. Which I'm sure that you have to work hard to manage and try to keep within a reasonable scope.
Yes.
I can imagine at a time like that that people are exceptionally uncomfortable, wanting things immediately, and their expectations might be far and away unusual.
And it's frustrating because people couldn't get out of their house. Almost every Monday there were state of emergencies. So there were just setbacks left and right. But I think we pulled through it okay, and it's spring and on to bigger and better, hopefully.
Hopefully not flooding, right? Although so far it seems like the water has found its way out without any
Yeah,
great...
I think we've been somewhat fortunate in that regard.
Yeah, yeah. So regarding the industry, the insurance industry as a whole, what's going on? I understand that there's some consolidation going on, and things of that sort. What's happening out there?
There's a lot of consolidation, and the
Okay.
consolidation's triggered by a number of factors, in my opinion. One is the cost of money is relatively low.
Okay.
You have a lot of the large brokers competing to really build up their books of business. So they're actually buying as many agencies as possible and competing against each other, which actually has driven up the value of the agencies.
Okay.
You have banks entering the business a few years ago, and they've bought some significant size agencies. The competition is so steep out there right now, and you also, in our state, Massachusetts, you had the introduction of the direct writers a few years ago that you never had. I don't know if you recall the introduction of the modified competitive auto situation. So when the state went to competitive auto, it's attracted back Geico and Progressive and some of the other all-state, some of the direct writers, not the independent agency systems.
Okay, if you might just give us a little bit more information about the direct writer. I presume by writer you're referring to those who write the insurance.
Yes.
So a direct writer is...
So there's channels of distribution, Ed.
Okay.
And the different channels, a direct writer has an employed salesperson. They represent one company. So the Geico that you see on TV, the Progressive, where you call an 800 number, Liberty Mutual would be considered in some instances a direct writer. Now what's becoming blurred is the direct writers have recognized that in the Northeast at least, independent agency systems control the volume of business. So what they're doing is trying to get into all the distribution channels. They're trying to have some independent agency representation. They'll still have their direct writer salespeople, their employed sales representatives.
They can have it both ways?
Yeah, from a regulatory perspective, you can certainly have both representation on both sides.
Okay.
What becomes blurred is, again, the consumer choice. And the pricing should be similar.
Okay.
So let's just take the independent agent or broker as you know it. So the independent agent or broker represents either a few or several carriers.
Okay.
They contract with the carrier, and they represent both the consumer and the carrier. They
Right.
have sort of fiduciary obligation to both.
Okay.
The direct writer in the past had an exclusive representation to just his company or her company, and it's become blurred largely because of the competition out there to try to secure business.
So who's protecting the consumer here?
Okay, so each state has a division of insurance that obviously oversees all the carriers, make sure there's not a monopoly, although in this industry I don't think you'd see a monopoly, even with all the consolidation going on.
Okay.
But the consumer's protected really by, obviously, the Attorney General, the Division of Insurance. And the consumer really has to interview and make sure that the level of service and expectation of service they need is there. I think oftentimes price is the driving issue. And price can be confusing because price could mean you're giving up something that you don't understand. Price could mean you're taking a 6-month policy, not see the fine print and say, well, yeah, it's half because you used to pay for a year. So there are sort of mitigating factors that a consumer really has to focus on to make sure they're getting what they deserve.
Would you say that this might be a tricky question to answer, but let me ask it anyway. Would you say that the direct writers are as inclined to protect the consumer as the agency, the indirect writer?
So I'll be impartial here and politically correct. I think everybody has a...
I didn't mean to set you up like that.
Yeah.
I'm serious about my
Yeah.
question because it's
I think it's a valid question. And I think in every industry there's ethical, professional people and there's unscrupulous
Okay.
people.
All right.
And I think you could end up on either side of the fence with somebody with either the
With either
ethical
one.
representation or the unethical.
Okay.
I think the important thing to ferret out is to really find out who's providing your coverage, ask the questions you need. There are people that simply want to enter something on the website, never hear from anyone again. There are those consumers. And I think the industry's trying to find a balance with advertising and direct approach and using independent agencies is to get the customers they want that fit their matrix.
If I were a consumer shopping, if you will, for insurance, and I guess that's the way the consumer approaches it, if you will, right? I'm seeking some type of insurance, whether it be home or casualty, life, or this, that, or the next thing, and I wanted to interview potential carriers, potential providers. What kinds of questions should I be asking? What am I, as you said, and I'm inclined, people are inclined to first and foremost look at dollars and cents. What's it gonna cost me to have this particular coverage? But beyond that, what kinds of questions should I be asking?
So in selecting any sort of trusted advisor, whether it's your estate planning attorney, your accountant, your ERISA attorney, whatever your goal is, many times people look for the trusted advisor through a referral. And then they interview a couple. But I would say, what are the value-added propositions the agency provides? Do they go to the registry? Do they do annual reviews? Do they shop your coverage every 3 years? If you have a claim, how is the claim handled? Now, the challenge for the consumer is until you've had a loss, you don't know what the claim experience is. Until you've had a coverage issue, you don't know what those issues are. But I explain to people, if you're a new or evolving business, for example, it's important for you to have communication with the person that's providing you the service.
Okay.
What if you bring on a new line? What if you hire 50 subcontractors? Somebody's got to be aware, because all these policies and provisions are sort of homogenous. You accept them from the insurance company. So somebody's got to be aware of those contractual issues and make sure that the program you get can be altered to meet your needs in the future, and that at the current time it fits your needs. So the questions I would ask: service, claims, if you need certificates of insurance, how quick do they come? Who's my contact? Do I have a team? Do I go to some people are comfortable going into a phone trunk where they get somebody new every time.
Okay.
I find the more mature clients want to deal with the same person. They don't want to have 18 relationships. So it's those kinds of things that I think would drive your selection of your provider.
And if a prospective client were to ask for referrals, is that something that can be offered? Is that a practical thing, or is that...
Absolutely. I think on the commercial side and the mid to large market account segment, that's oftentimes done at the time the proposal's delivered. They'll say,
Okay.
we need 2 to 3 people either in our industry, not our direct competitor, or somebody aligned, that we can make sure that you're going to deliver what we need.
Okay.
And everybody's needs are so different.
Right.
And you can't do it anymore based on premium size. So in the old days, a big premium generating account might have had more needs than a small account. But now even a small contractor enters into subcontractor agreements, needs certificates for the town. He might do a job a little outside the scope of the ordinary.
Right.
So all those things
His premiums
require
are now
service.
going up, and there's
Yeah,
services
not
that are going up
significantly, but he
accordingly.
still has, I would say the service is sometimes disproportionate to the size of the account.
Oh, I see.
And,
Okay.
and I think it's important that everybody realize that their account is important. Just because they're not paying $1 million a year,
You still matter.
it matter.
And would you also say that there's occasions where you would refer prospects to customers? Is that conceivable?
Meaning,
An existing client referring a prospect to an existing client. You referred to other. I believe what you said is other agencies, other people out there who would vouch for your credibility.
yes,
But would you also refer to existing clients within your practice? Is that something a person could ask for?
absolutely, we would
Okay.
do that. And oftentimes, Ed, at least with me, if I go in and something is outside of our scope that we're really good at handling, I may refer them to another agency or carrier or whatever so that their needs are met correctly. You know, we don't want to take on something that doesn't fit the bailiwick of what we do every day.
Right. No, I can totally understand that. So, long range in the industry, what's transpiring? What's going on?
So I think your question about how does a consumer find someone is an excellent segue into that question, because what's going on is there's a lot of what we call predictive modeling. So predictive modeling is not intuitive underwriting. It's where carriers invest in sophisticated systems that are going to determine your price, whether we're going to write you, whether you're going to be paying X amount more than the next client. And some companies could use upwards of 50 or 60 variables in the background, including credit scoring. And credit scoring is a good example of what predictive modeling can do. So credit scoring isn't your FICO score that you might do when you apply for a mortgage. Credit scoring in the insurance industry is, have you been canceled before? Have you had claims? Have you moved around? So the credit scoring process is something that an agency can protect for you. Now,
Okay.
here's a value-added service that an agency can provide. So if you're up for cancellation and you're a business owner and your policy cancels and it's predictive modeling, the way it works now is you could actually be canceled by your existing company, and because you were canceled, have difficulty getting your next program and have to go to a surplus company, because predictive modeling is not an intuitive underwriter where John can say, you know, I've known Ed for a number of years, he's a super guy, does a lot in the community.
So it sounds, if I may, it sounds like this is a move to expedite the process, but not necessarily a consumer-friendly move.
It can be consumer friendly because it's point of sale. So in the past, you would submit your application to underwriting. Underwriting would either accept, decline, or modify, and that process could take weeks depending on the volume,
Right.
how many questions they have. With predictive modeling, it's a process that moves it to point of sale pretty quickly. The problem is if you have variables in the background, poor credit, your Dun & Bradstreet isn't good, you've had a number of claims, the system's going to kick you out pretty quickly. So the agencies need to protect or at least make clients aware when they're behind payments or whatever, because if you've canceled a couple of times, it's a challenge to get coverage.
So the predictive modeling, I presume, is something like an algorithm. It's like a computer-based process with data points input and it spits out. Is that?
Yeah, so you've hit the nail on the head. With predictive modeling, the agencies become the rater and underwriter. It eliminates the company from touching the process so much because the computer system makes the determination.
Makes a decision, if you will.
It's a decision-making system. And the agency takes the onus to input the data, get the supplemental data, and then you input it and you get your price almost on the spot.
So do I have the ability as the consumer to as you said, with the intuitive underwriting, where there's a person, an underwriter that may know me, my history, and might say, "Oh yeah, that's a one-off. Ed doesn't normally do that sort of thing. That's cool. That's okay." Is there an opportunity for me in the predictive modeling approach to say, well, an appeal process, if you will, or is it, here's your price, this is it, you're done?
Certainly on a smaller scale, there's less negotiation.
Okay.
It's a homogeneous contract. You accept it. You accept the terms, pricing, and conditions that are offered.
Okay.
If the agency has a number of good relationships and carriers that they represent, they may be able to manage that process for you, and that's why it's important to find somebody to help you.
Okay.
Certainly, if you go to a direct writer and you input something over the internet, and I'm not disparaging the direct writers, but their process would be you put it in, you get your result. Usually there's no bargaining. So it would really depend on whether it was a mutual insurance company, a national carrier, whether they have some allowance to have some interaction. But like every industry, the less human cost or expense, the more profitable. So it's both an expediency thing, efficiency, and it's a reduction.
I suppose it's where things are moving in general. It's not, the industry is not unlike industry at large.
Exactly. Technology
is exerting its influence, and we are taking advantage of that so as to boost our profitability, as you say. It's an interesting thing that the things you're talking about and framing it from the consumer's perspective, because I believe a lot of consumers have absolutely no idea. We look at insurance as a necessity and as a cost, but we don't appreciate the balance that goes on in bringing it to fruition. I really appreciate that. We have a couple minutes actually left. I'd like, if you would, to just kind of give me a summary of the best practices for consumers with an eye towards where the consumer is going to be going in the near future, if you will.
Without getting into social media, obviously, because that is going to have an impact, I believe, on insurance at some point in time. Certainly, from a business perspective, there'll be marketing, I'm sure, on Facebook and LinkedIn and trying to attract as many customers as possible. But from the consumer selection process standpoint, I think some of the things we talked about value-added service, if the customer knows you're good and you're up for cancellation, if you have a claim that they assist you. Certainly with the policy selection process for business owners and homeowners, let's talk about that for a second, Ed. With predictive modeling, you get the business owner's policy, which is a simplified, allegedly simplified, sometimes couple of 100-page policy that might throw some additional bells and whistles in. Now, back a few years ago, the agents would sort of have an onus to go through your exposures and make sure they offered coverages that matched up with your exposures.
Okay.
With the introduction, in my opinion, again, this is my opinion, with the introduction of those simplified policies that go through predictive modeling, oftentimes that exposure analysis isn't conducted. So you could end up with something like you don't have transit coverage, you need environmental, it was never brought up. They might throw in $5,000 or $10,000 of what we call employment practice liability, which is wrongful termination coverage. Well, you may have $1 million exposure because you have 30 employees.
Right.
I think some of the simplification and point of sale process has eliminated human exposure analysis.
Okay, very interesting. Well, John, our time is coming to a close. I'd like to thank you again for being here this morning. Again, this is John Dustin of JED Insurance and Financial Service Agency. John, it's been great chatting with you. The information you provided, I'm sure, will be of tremendous benefit to the audience. And I appreciate the time. Thank you.
Appreciate you having me, Ed.
Thank you.